Sure. Thank you. Maybe I can have the first slide, and thank you for this opportunity.
Yeah.
Firstly, I'd like to thank BRI and the team at BRI to organize this discussion. I think it's a very timely and opportune occasion to talk about the outlook for microfinance. Microfinance in some way has just come out of possibly its most significant challenge in the past 50 years of its operations. Dealing with poor as microfinance institutions do, it always comes with uncertainties and vagaries of the environment. But nothing has been as significant as the pandemic and COVID-19 in the past 2 years. It has really resulted in a tectonic shift in how microfinance as a business is run. And the outlook for microfinance is clearly going to be determined by what policymakers and practitioners like people amongst us will do in 2022 and the year going forward. Can I have the slide, please? It's on the screen, or I'm not able to see it? Yeah, thanks. Yeah. So my name is Anshukant. I work at the Asian Development Bank and specifically at the private sector operations. And I am part of the team which runs what is called the Microfinance Program at ADB. Essentially, we help microfinance institutions mobilize financing from commercial sources for their on-lending activity. So I will talk about the context of the outlook for microfinance, not so much in a global sense, but more closer to home and specifically for Asia. Now, if you look at statistically, about half the microfinance which happens globally is in Asia, and the other half is possibly between Africa and South America, about equally divided. But closer home and to where ADB is, that is where we could talk about. Can I go to the previous slide? I will just sort of lay out what we were planning to discuss. Yeah. So very quickly, we'll try and go through the post-pandemic context of microfinance, how it has changed, how the operating environment has changed. The second, which is a very important point, is how the business of microfinance itself survived the pandemic. It not just survived, but it also emerged stronger and more resilient. We'll talk a bit about the regional update of how different countries are responding to the challenges of microfinance. And lastly, about managing growth and what are the challenges ahead for microfinance. Unfortunately, the end of pandemic may not be the last of challenges that microfinance will go through. Next slide, please. This slide is really relevant from ADB's perspective. This sets the context of what has happened or transpired in the past 2 years of the pandemic. If you look at the hard blue line on this graph over here, on the x-axis, we have the years from 2012 to 2020. On the y-axis, we have the number of people who are living below the poverty line, which is defined as $3.2 per day, as per the World Bank and international standards. So the blue line was clearly moving down all the way from 2012 to 2020. Poverty has been reducing in Asia. This is one of the most commendable achievements of the 21st century also. The pace of growth has been really good. Initially, the poverty was reducing more in Southeast Asia, and of late, the trend was largely in South Asia. So it's been a pretty balanced mix. And until 2020, this trend was definitely heading downwards. 2020 and the first quarter at the onset of the pandemic, this trend has been definitely vitiated. Now we are expecting that given the substantial lockdowns and the slowdown in economic activity across all of Asia, including our member countries, there is going to be very high likelihood that the number of people who are living below the poverty line is going to increase. Depending on how we define that consumption at the household level is reducing, the trend could be between the red dotted line and the amber dotted line that you see on the right side of the graph. But essentially, we have a concern that close to 400 to 500 million people might be back into poverty because of the pandemic. Or if you look at the other way, the pandemic is threatening now to unwind or undo the achievement of poverty reduction of the past 4 years. So the great results which were delivered in the period of 2016 to 2020, there is a palpable risk that these results might get reversed because of the outcome of the pandemic. This is the data which is for Asia and therefore more relevant for us. Next slide, please. This talks again about what is happening in Asia, also in a global context. The red bubbles over here is what was extreme poverty. That means people earning less than $1.2 a day in the year 2012 in the year 2002, and the green ones are more recent data of 2015. Arguably, the data is not the latest as we could probably share at this time, but the intent here is to show the trend of how poverty has reduced in a more optical sense. The fifth column, if you would see here, is specifically relevant for Southeast Asia, and Indonesia would be a part of that. The bubble was not very large in the first place, but a very notable reduction by almost 4/5 has happened in the past years till 2015. Now we are expecting that the green bubble, which is quite small per se, it might increase by about 3 to 4%. That means people living in extreme poverty might go back to that unfortunate state because of the outcome of the pandemic. So this just gives a context of what is happening for different parts of the regions in Asia. Next slide, please. Here we also look specifically at the impact of the pandemic at the household level. So we are trying to sort of see for the entire continent of the Asia and the Pacific. Then we come to the regional mix of various parts of Asia, and now actually at a more micro or household level. The absolute bar charts are probably not really relevant, but what is important to see here is that more than 40% of households across all countries, including Indonesia, Philippines, Cambodia, they went through acute financial distress due to the pandemic. Some of these things are intuitively also seen at our individual level. When we go out and we want to buy fish or vegetables or fruits, we feel and we see that a lot of stores are closed, and they've been remaining closed for almost 2 years. And that was the sole occupation for those households. So the pandemic has been extremely harsh on these people. What has also happened in a very negative way, which is important for us to bear in mind, is that each of these households have tried to cope up with the impact of the pandemic. And three things happened because of that. Firstly, they reduced their food intake. So they were already consuming less than what a normal diet should be, but they had to reduce it further. Secondly, they had to use their savings. That means their ability to withstand shocks in the future has also come down, and the savings which were for a rainy day have also reduced. And thirdly, which is also an important aspect from a human capital point of view, is that in all these households, the children who were being educated, their education expenses had to be cut off or trimmed. So the children's education process has also got elongated and vitiated because of the pandemic. So this sort of lays the context of how the operating environment has changed in the past 2 years. And these are the households and the clients which are really the client segments of microfinance institutions. So these are the ultra micro entrepreneurs, as was mentioned by Director Supari also earlier, that who are now facing these consequences. And it is upon us really to determine what will be their economic outlook in the year ahead and beyond that. Next slide, please. We have actually seen, and much to the sense of bolstering our confidence, that microfinance actually survived the pandemic extremely well. So just going back a bit, the previous 3 slides, the idea is not to leave any of the listeners here with a very negative point of view. The idea really is to underscore that there has been a setback in poverty reduction, but it's important for us to see the part of the glass which is also full, which means that the policies that we had in the past, the actions taken by the government, the vibrancy of the private sector, the jobs which were created, we have a very strong history of removing poverty in the region. And it's probably important that we roll up our sleeves again and go back to that job, because the pandemic is sort of threatening to unwind all the good results which we have achieved in the past. So it's more of a positive context that we can go back to the tools that we have and to the policy measures that we have to rebuild economies and to rebuild livelihoods also at the grassroots level. And one of those tools, very importantly, actually is microfinance. We have seen microfinance come back extremely well after the pandemic. MFIs or microfinance institutions which directly engage with the borrowers, they reconnected with their clients. They were quite understanding and flexible about providing moratoriums to their clients or a grace period for the loan repayment. Specifically for the time and collections could not be made, and there were widespread lockdowns or quarantines in various countries. They also removed penal interest rate in many cases, which was also a bit of a financial setback for the MFIs because their operating costs had increased and their revenues had come down. So they did sort of act in a more client responsive manner, as we could say. Steadily, they also increased their lending, what is called emergency loans to the micro borrowers. This was an important step because this helped build confidence back in the micro borrowers or the micro ultra micro entrepreneurs, as we call them for this conference. Typically, if you see MFIs in India or in Bangladesh or Indonesia, the kind of loans that they give, they vary in quantum from about $150 to $200. That could not have happened during the pandemic because the MFIs had very small resources. So they switched to much smaller loans of almost $40 to $60. But the loans were given in a faster disbursement process, and the clients or the micro borrowers were, extremely sort of pleased with that approach because they got emergency loan purposes just to meet their cash flow expenses. So the whole ability to sustain during the pandemic was supported by the MFIs. One of the things that has happened is that MFIs were focusing only on the existing clients in the past 2 years. What I'm trying to say here is that they were not trying to widen their client coverage or bring in new clients to micro borrowing because they themselves were short of resources. And that has both its pros and cons, which we can discuss here. It's important to bear in mind that this action was really very well supported by regulators across all the member countries that ADB works in. The regulators, including those in Indonesia, they helped build up liquidity for the MFIs. They also allowed moratoriums from commercial banks, and they generally opened up access to finance for these entities. The lenders were also much more considerate to the MFIs in terms of accommodating their liabilities and making sure that the MFIs can sort of continue to service their clients. And the restart of lending to the micro borrowers, that has been a very significant step, which has helped build resilience for the sector. Next slide, please. This is just sort of the long story that I mentioned in the previous slide. This just captures it in a particular trend. So we are trying to see what happens to the collections that microfinance institutions used to make historically during the pandemic. So there is a standard ratio called collection efficiency. It is not really very difficult to understand. It's just a percentage of what is collected during a month as a percentage of what was due during a month. So in the past, historically, before March 2020, for every 100 which was due during a month, the MFIs were collecting 98 or 99. At the onset of the pandemic, if you see in April 2020, that number fell down very sharply. So that 98, 99 became 4, and there was a very substantial shortfall in the collection that the MFIs were making, and therefore also in the lending that they were doing to the micro borrowers. Sorry. This was the onset of the pandemic, and then we have seen slowly it building up to the levels of, again, 80, 85%. And then towards the middle part of previous year, which is around May or June 2021, is when the second wave of the pandemic came in. And again, the MFIs had to face extended lockdowns, and they were unable to sort of service the clients. But clearly, you can see the shift between what happened in April 2020 and the same event happening in sort of June, July 2021, which also talks about how MFIs are resilient and how they manage to adapt to the situation. But this has been sort of the nutshell of the story of how MFIs survived the pandemic and how they are now better prepared to serve a client base, which is unfortunately worse off in terms of their income and their consumption because of the pandemic. Next slide, please. We have clearly seen microfinance emerging stronger and more resilient. This is a trend not just for the large markets for microfinance, which are like Bangladesh or India or Indonesia, but even in smaller countries and smaller markets, microfinance institutions are now looking more resilient compared to at the start of the pandemic. They are able to access new funding, which is important because that is the mainstay of how they will lend additional funding to their client borrowers. They are still focusing on existing clients, which is a bit of a setback. Actually, empirically speaking, all the MFIs that ADB also works with, which is about close to 40 in number, they have seen a net reduction in their clients in the past 2 years. So they were servicing about, say, 100 clients at the start of the pandemic or before the start of the pandemic. That number has come down to about 80 or 85. Typically, they were adding new clients at the range of 20-25% per annum, but now we have seen about a 10% per annum decline. And that is where the concern is coming, that MFIs need to step up so they can expand their client outreach and bring more people having better access to finance, which is going to be an important part of rebuilding their livelihoods, especially for the pandemic recovery. This has to happen in a context where, like we discussed in the first 3 slides, where the clients of the microfinance institutions are definitely poorer and they are definitely more vulnerable. So it will take fair amount of synchronized policy action and activity by the practitioners to give MFIs and microfinance a robust outlook for the next few years ahead. Next slide, please. This is just a summary of what is really going to be shaping the access to finance and to microfinance outlook in some of the major markets that we work in Asia, and principally in South Asia and Southeast Asia. There are various policy measures sort of outlined over here, and each of them can be reviewed and realigned by the regulators, by the governments, to see how they can support the sector. So there is, in many countries, there is a mandatory credit allocation to microfinance. That means banks must put aside a certain percentage of their assets to this business. These kind of, provisions or laws are pretty adequate or well-defined in countries like Bangladesh and Indonesia and India. There are markets like Philippines where they're still being evolved. The context of adequate here also on the right side, as we have shown, is to be seen in the context of what happened prior to the pandemic. Maybe they were adequate prior to 2020, but all these measures will probably require a review and a tune-up as we try and come out of the pandemic. MFIs in some countries are able to access savings and deposits from the clients. This is notable in markets like Indonesia, and it's not there because of regulatory restrictions in markets like India. Now, this happens both in a positive and a negative sense, that the MFIs in countries like Indonesia and Philippines, they were able to safeguard their clients' savings. And despite the pandemic, in most of the situations, the clients managed to run their livelihoods without dipping into the savings. That has been a pretty important contribution of microfinance, that they help build resilience and help conserve the resources of the poor, which are anyway really modest, because we all know from our books of economics that the poor have a very high propensity to consume. So the saving rates are anyway very low to begin with. This sort of cuts the other way also, is that while the MFIs depend well on savings, we are not likely to see a growth in savings in the next few years also, because the poor and the underprivileged have been impacted by the pandemic. Their earnings will not be adequate to keep aside something as a form of a saving. So the MFIs would have to seek other sources of funding as we go ahead. We've also seen, lastly, a point that I want to mention over here is that the access to finance for microfinance institutions is really dependent on how the commercial banking sector in the country views that sector. We have still some countries where commercial banks tend to view microfinance as a very risky and unsecured business of lending, and they haven't really adopted or probably completely understood the complexities of this business, yet the ability to scale it up quite substantially. And there are other markets also where the understanding with the commercial banks is now gradually improving, and MFIs have better access to funding. We are expecting lead institutions like BRI and now their partnership with BNM, which will sort of open up access to financing for MFIs as they grow their portfolio ahead. Next slide, please. This is just to sort of sober out in some way the outlook for microfinance, which is going to be hopefully very positive in the next 2 years, given the measures that the various governments have announced and the more renewed interest in the sector, and also how it has come out stronger and more resilient from the pandemic. However, this will unfortunately not be the last of the challenges that microfinance is going to face. At ADB, we consider that the next challenge that microfinance will potentially face is going to come from climate change and from the incidence of disasters, which is increasing across Asia and our member countries. We know that almost 50 to 70% of the clients of microfinance are directly or indirectly drawing their livelihoods from agriculture, either directly from farming itself or from various other farm-based activities. And farming, we've seen as a business or as an economic activity, been highly vulnerable to weather changes, and extreme weather events are on the rise. We don't really call this as man-made disasters anymore or as natural disasters anymore, but there is clearly not just an element of natural disasters here. There is a clear interface with climate change, which is going to make the environment for MFIs more challenging as they go forward. And also there will be a need for MFIs to make sure that their clients become more resilient to these extreme events. Next slide, please. Can I have the next slide, please? Yeah. So in terms of talking about the headwinds or the challenges that MFIs and microfinance must come to terms with, one is that the level of indebtedness or the amount of borrowing that clients have has been increasing over the years. Now, this indebtedness earlier was getting supported by much more robust growth in income also. Unfortunately, in the past 2 years, income has really not increased to that extent. In fact, it's reduced in most instances. Typically, if you see households in rural areas, in many countries like Indonesia or India or Bangladesh, each of the household also benefited from some remittance income, which used to come from the urban centers or the large cities, where some of the household members migrate and they work there and they save some funds and send it back to the family in the villages. This remittance, which used to come and be a pretty steady source of income for the household, that has reduced very significantly. The jobs in cities are now much fewer, the wages are lower, and it's very difficult for the people working in cities to save and send or remit money back. So the borrowers are facing a situation of higher levels of debt while their income has come down. So MFIs would have to be very prudent about how they manage this, given the limited financial literacy of these borrowers, and how MFIs adopt, what we call as client protection practices or reasonably sound lending practices to make sure that they don't cause the scale to tip over. The other thing that MFIs themselves would face a challenge on is that they had a much higher operating cost base now compared to the past. Their portfolio is still recovering from the impact of the pandemic, and the lending margins are coming down. So they would have to tide over these difficult situations before they are sort of completely back on their feet. But clearly the bounce back and the sharp turnaround that we have seen in the past 2 years sort of underscores that they will succeed in this trend going forward. Next slide, please. This is just to give you a context and a summary of what is really happening both on the demand side and the supply side for microfinance, and specifically for one aspect of microfinance, which is about housing. So we all know that the poor, which are in urban or rural areas, we have seen often enough that they are living in pretty difficult housing conditions, and their houses are quite prone to extreme weather events. So MFIs and institutions were providing microfinance for housing in the past, but that number has dipped very substantially in the past 2 years. And subsequent to the pandemic, it has actually even worsened further. So there's a very clear cutback in supply, while the demand for microfinance for these purposes actually increased. So that is where the big gap is coming in, and where actions both on the policy front and by the practitioners are going to sort of shape the outlook for microfinance. Next slide, please. And hopefully this is the last for the discussion. Yeah, this is not an advertisement for ADB, but I'll just sort of quickly run you through what we try and do through the program. ADB is very committed to microfinance, and we see this business and activity as a key part of rebuilding livelihoods, especially after the pandemic. Microfinance institutions deal with clients which are outside the reach of commercial banks, and even though commercial banks are making strong efforts, it will take quite some time before they will adopt their business models to reach this segment. ADB helps this process through our guarantee program. Each year, we help mobilize about close to $400 to $500 million for MFIs from commercial sources, and this money is then used for their on-lending activity. We also help MFIs in the capacity building work, specifically in some aspects around financial planning and risk management. And increasingly, we are focusing on micro insurance for natural disasters or man-made disasters in some cases, might call, and financing for home improvement. And we look forward to sort of, working with BRI and PNM also in sort of bolstering our partnership ahead. Thank you.
Okay, let's give an applause to Mr. Taneja. Thank you, Mr. Taneja, for your presentation and research. It's very insightful how microfinance can help the rising of poverty and how microfinance can boost economy in the pandemic era. Okay, I will back to you later on the Q&A segment, Mr. Taneja. Stay there.
Sure.
Baik, pemirsa yang hadir secara virtual maupun yang berada di area acara ini, kita akan kembali lagi untuk diskusi tanya jawab kepada dua narasumber kita yang luar biasa, yaitu Bapak Supari dan Mr. Taneja dari ADB. Tetap di BRI Microfinance 2022. Jangan kemana-mana. Terima kasih.